Hello, George Markoski and Christina Markoski come to you live at the Positive
Hello,
Property
I'm coming
Show.
to you from the virtual office. Isn't this cool?
That's right, it's fantastic. And I'm coming to you from my real office. Now,
Nice.
if you're watching live, type in hashtag live, and the people watching the replay, type in hashtag replay. Let's catch everyone up. So Christina and I, we've spent the last 4 months in Bali, and
Yes.
it's been excellent. And then after Bali, we went for a conference, and we went to this conference and went to Fiji. I'll tell you what,
An amazing
Canggu has
time in
made
Fiji.
us a little bit weak because I found Fiji a little bit cold for my liking.
That's
But
crazy. Fiji
yes,
is not a cold place by any means. I wasn't cold. I was fine.
okay. So the thing is, we're always wanting to learn and become better coaches and better at what we do. So we practice what we preach. We spend a lot of money. Part of the group where I was called Boardroom, and we spend 3 times a year. We spend 3 or 4 days with very successful business people from around the world to find out how they look after their clients and what they do for coaching and how to improve what we do,
That's right.
which I think is very important. And I found it very, um, really good. Always learn a lot. And you know what I'm excited about? I'm excited about bringing back a few of these skills for our 2-day workshop because I'm going to make this the best 2-day workshop we've ever had in our company history.
I'm very excited about that.
I'm going to be giving it 100%. I'm going to get in there. I'm going to do Tony Robbins style. It's going to be very exciting. So I'm
Nice.
really excited about our 2-day workshop and really giving it 100%, which is going to be
Yeah,
great.
absolutely. I'm very
So what I
excited
was going
about
to do
that
is
too.
I was going to go through and talk about the state of the market, what's happening in the world.
Nice.
So let me just do that.
Fantastic. There's a lot been happening in the economy lately. There was
There
that
is, there
stock
is.
market crash the other week. It's just been a bit of a roller coaster. It's been
Yeah.
crazy.
So the recession's impact on real estate. So that's what we're going to talk about. We're going to talk about what's going to happen with the impact of the recession on real estate. I want to talk about what's happening in Australia, especially. So one thing, the dream of owning a home in Australia is slowly fading away for the average Australian. That's the sad fact.
Not the first
Um,
time I've heard someone say that.
okay, so Australians working in the country's most common jobs cannot comfortably own their own home. It'll take about 2 decades for people in these jobs to save 20% house deposit based on saving 15% of their salary each year.
Do you want to put it in presentation mode, George?
Yep.
There, that's
Okay.
better. I'm a
Is that
high
better?
visual. I need the visual to hit me right in the face so I can
Yeah.
take in the
Okay.
information.
So what they're saying, it's going to take between 20 to 40 years to save a 20% deposit for the average home in Australia now.
Wow,
So,
that is sad.
so look, that's why it's so important to really get into investing now. And one thing, if you're not doing it for yourself, doing it for your kids. Because if you look at Europe, and this is fascinating about Europe, the market's already been very expensive for a long time. And what most people do is they build a big house and 3 generations live in the same house. And
Yes,
then when the grandparents die, the parents go upstairs, the kids go up, and the 3 generations live and keep cycling through because they can never afford to buy their own property. And I think it's up to today's generation to really get a foothold in the real estate market. So Australian housing construction is tipped to fall even further. So look at this.
wow.
Australia is experiencing a record shortfall between population demand and supply, which is the primary driver of the nation's current rental crisis. So if you look at this, right, this graph, this is a fascinating graph. So population change. Now you look at 2021, right?
Wow.
Nothing, no population change at all, right? Now, 2021, you look at the amount of approvals, commencements, and completions of property. Look at the amount of commencements and approvals.
But that's fascinating how it dropped off the cliff And then it just bounced back higher than
Yes.
ever.
That's called immigration policy.
Wow.
But if you look at that, 2021, our housing construction was super high, the highest it's ever been in history. But we had zero population change. We had massive construction. But guess what? Still had a shortage and property prices still went up.
Wow.
But look what's happened now. The population graph has gone up and it went up to about 670, dipped at 650,000.
It's almost off the chart.
Yes. Now, you look at approvals. Approvals gone down from 500,000 down to 220. Commencements has gone down from 500,000 down to 220,000.
And then you've got completions that's not matching that line.
Completing 260,000 of what's in the pipeline. So if you look at this is what's happening. One, we've got a population boom from immigration. But two, we've got nothing coming in the pipeline because we don't have any commencements or approvals. Because commencement approvals is going to show you what's going to happen next 2 years. So whatever the undersupply is now, 2 years' time, it's going to be exasperated.
So it's going to get worse.
What does that mean? What does that mean? Well, this is what it means. What it means is that really we're going to have the biggest supply shortage in history in 2 years. Not now, 2 years' time. So think about this. If you had a crystal ball and you knew there was going to be a massive shortage of property in 2 years' time, so there's going to be a massive problem with supply, but the demand's going up because of the population, what would a smart investor do in that situation?
Get more property.
You would buy everything you can.
Yeah.
Right? Now, let me show you another statistic. So
that property is going to be a lot more valuable in 2 years' time.
Exactly, because it's going to be even rarer.
Because it's rarer.
Yeah, the reality is that the macroeconomic conditions are currently stacked against home building. Namely, interest rates are high, crippling demand for new homes, and, let's go back, crippling demand for new homes and builder finances. Construction's costs have gone up 40% since the start of the pandemic, making the construction of new homes too expensive. Nearly 3,000 construction companies collapsed in the past financial year. This is the biggest in Australia's history. In the last 100 years, last year was the worst for construction industry in 100 years. Home buildings are competing for labour and materials with government big build infrastructure projects. And they're competing with the mining companies because the ore boom, the commodities boom. Think about this. If you get a job in the mining, you're going to get a lot more money than working a construction site building a house. So it's hard to get the work. So all these things are a perfect storm. Okay, now look at Albo's housing target, 240,000 per year.
We're way under.
These headwinds have combined to destroy Labor's financial target of building 1.2 million homes over 5 years, a target that's never been achieved in Australia's history. So if you look at how many houses we build, from 1984 onwards, you can see this graph, right? And we really peaked 2017, right? But Albo wants us to build 240, but our capacity has been going down since 2017. Look at that, it's been going down, not up.
Down, yeah.
Yes. So the challenge is we've got less capacity to build. We've got less capacity to build property. We've never had such a low capacity over the last decade. This is the lowest we had in the last decade. And 3,000 construction companies have gone down. The pipeline over the next 2 years is almost gone. There's nothing left. And all the good properties, the pipeline, guess what? We've got them all in positive property. We've already put our names down, right? We've got them reserved. Because I don't know if you know, but we plan 2 years out and we get developments. Even when the developer's thinking about the development, we take it if it's in the top 100.
George, what do you think has contributed to that downward trend in less homes being built, less completions?
Well, one thing is We got less approvals because interest rates are high, so not many people are buying brand new property.
Okay, so
people
high
are waiting.
interest rates.
So what's happening is the general market is waiting for interest rates to go down because they're not confident, they're scared. And now what's happened, this is another thing that's happened. There's been a lot of talk about recession. Bitcoin's gone down. The stock market had a bit of a crash. Now you look at what's happened in the stock market. The people that got a self-managed super fund and put it into property, they've insulated themselves against stock market prices going up and down. Where, when the stock market dropped 20, 30% recently, that would be a big hit to your super.
That would have impacted a lot of people's superannuations who
That's
had
right.
it in
But
the
it's
stock
going to
market.
bounce back. It was a correction. It's going to bounce back.
Right.
But there are talks there could be a GFC recession around the world. What does that mean? That means that businesses are going to tighten up. Because I went through 2008 with our members. We've gone through it, so I know exactly what happened. Business tightened up. Consumer spending went down. High-end properties dropped. So those real big properties, there was $12 million properties. And at that time, that was the peak of the market in Sydney. There was $12 million properties that dropped to $6 million.
What happened to
Now,
commercial property?
Commercial property always gets hit hard with economic downturn. And as you know,
Right.
I'm not a fan of commercial property. Commercial property got really destroyed.
Yeah, well, I would imagine if everyone's sort of tightening their belts, there'd be less retail spending and everything else like that as well.
That's right. Now, the thing is, with you look at COVID, what happened with COVID, Australia actually did better than any other country, right? We actually defied the odds. Nothing happened to our economy. We did better. The only state that didn't do good was Victoria.
Yeah. Why do you think the majority of Australia did okay, considering?
I'll tell you why. Our government was actually very smart. So back in 2008, we had Kevin Rudd. We had the 2008, the GFC, right? Kevin Rudd, he wrote checks for all the lower income people in Australia and gave everyone a $2,000 check. Those checks converted into TVs the week after, and every single poor person had a big screen TV in Australia, and all that money went back to China because that's where they were getting manufactured. So what we did is we had a government stimulus and sent it all to China, and China said, thank you very much, we needed this, thank you. Now, this time around, our government was very smart because the backbone of Australia is small business. There's 750,000 small businesses in Australia, and that's the backbone of Australia. 70% of Australia's economy is self-sufficient in its economy. So if you don't support small business, you're destroying 70% of our income because exports are only a small part of it, but an important part. So what the Liberal government did is they did the JobKeeper and JobSeeker. And what they did is when there's an economic downturn, businesses had to close because of COVID. And if you sack all your staff, then you lose the ability to fulfill your role and do what you need to do. So when economic times get better, you have to go through the process of interviewing, finding people, training people, and it takes years to get back to where you were. But if the government helps subsidize your staff, you get to keep your staff, your talent, and all your capabilities. Well, as soon as the COVID ended and the restrictions stopped, everyone went straight back into business straight away without missing a heartbeat. That was very powerful and very powerful with the economy. Because, I mean, I've got a restaurant in Adelaide and we were closed down. But because JobKeeper, we got to keep our staff. So when we opened up and started making money straight away.
You could fulfill the demand.
But imagine trying to find the right chef and then you've got to teach the people how to work in the team. It'd be very difficult and it would take years before you make a profit. But the government helped us make a profit straight away as soon as we jump back in.
Yeah, that's awesome.
And that's what happened.
We've got a question here from Carpenter. Will house prices fall if we're in a recession?
Okay. House prices may, how do you say? They may correct, yes. So house prices could fall for a recession, but not all house prices. The fact of it is there's 15,000 suburbs in Australia. So if you're investing in the top 100, you're less likely to fall. Is it going to guarantee you're not going to fall? No. I never guarantee anything because that's not the way it works. The thing is, we don't know if there's going to be a correction. And the people that are waiting for a correction and sitting on their hands, they're the people that don't make money out of real estate because they're sitting on their hands worrying about a correction. The people that make money out of real estate is the people that continually buy real estate on a regular basis, right?
Yeah.
So waiting to see what happens is not the right thing to do, even if there's a correction. There's a very small chance there's a correction, but probably not, because the housing shortage. The thing is, how is housing going to go down when there's the supply and the demand and supply equation so powerful in the demand side? So
yeah,
I
that's
don't
fascinating.
think so. Yeah, so I find so.
Now,
what
Lucas
might
said
happen-
our small business increased profits every year of COVID. Only now things have slowed down. Interesting.
Yeah, yeah. So basically, the houses that may go down is the ones at top of the food chain. For example, our house on the beach here in Adelaide, that's going to be the one's going to drop, if anything, drop, because there's not a massive demand for expensive real estate when the economy is bad.
Blue chip apartments like penthouses,
they're going to drop so badly, right? Blue chip apartments, penthouses, they're the ones that get hit the most, and they're going to drop by 50% if it happens.
Wow.
However, the sort of investments that we're investing in, where people need somewhere to live, they're going to be mainly insulated by any fluctuations in the property market, because people still need to live somewhere. Yeah.
Now, Nick has said the former government also left us with $1 trillion of debt plus 8% inflation.
Which government?
The former government.
Yes, yes, they did. And that's the inflation was because of quantitative easing. So they printed a shit ton of money. And what happened when they printed all that money? It went into the economy, and it works like a balloon. And the economy is a balloon, and it just pushes it out.
Right.
So what's happening now is most of the banks around the world are all dropping interest rates. There's only one main bank that's holding out. That's the RBA, right? So I'm hoping they follow suit. What the RBA, because the employment figures are so good in Australia, the RBA are holding off until there's a bit of a softening. So what happened is interesting.
What are they waiting for?
They're waiting for employment to drop.
Right.
Right? Because there's a lot of people working, people making good money. So the RBA is saying that's inflation. They're waiting for employment figures to drop and get worse in order to drop interest rates. Me personally, I should say, why don't you drop them now to stop them
why wait? Exactly.
from happening? Think ahead, like, hello. But they're not going to listen to me. So what happened was New Zealand, they hiked rates a lot harder than Australia. And that's really affected the economy, and they're struggling now. Canada was doing the same thing. In America, they've started dialing back now because they want to get their economy kickstarted. The thing is, governments are interested in keeping the economy flowing, right?
Yeah, well, it's in their best interest to have everything working.
The thing is, we have to realize a recession, all it is no growth for a certain amount of period. It's not anything terrible or anything like that anyway.
Yeah. Now, Kane has said, if we have a recession, the RBA will drop interest rates to stimulate the economy. Yes, I believe so.
Absolutely. Definitely. They certainly will. Now, one thing I found, 2008, none of our properties went down. Just so everyone knows. In 2008, we were buying properties for around $300,000. And now those same properties are worth 600, 700,000. And that bracket wasn't dropping because we're in the top 100 and people still need somewhere to live. The thing is, though, you've got to understand, back in 2008, we didn't have the shortage of properties like we did now. So it's a very different game. I feel that the property market is a lot stronger now than what it was before. But even though, if you bought in 2008, just before properties corrected, and waited 10 years, you would have doubled your property anyway. That's the fact.
Yeah, just a matter of time.
Whenever there's a correction, there's a massive overcorrection straight after. And that's the thing.
The bounce back.
Yeah.
There's always that property bounce back for sure.
Yes. Now, the thing is, I've been investing in property since 1995. So I don't know how long that is, but it shows how old I am, right? So I've been investing in property for a long time. And since I started investing, since 1995, every single year, there's been talk of a recession and of a property crash. Right? That's the factor.
And nothing's changed.
Nothing's changed. And I've been through a few property corrections. But what I've been doing is I've been buying property consistently. And those corrections did not affect me at all.
Yeah.
Because it's the long-term growth that matters.
Nice.
Yeah.
Excellent.
So I think,
shall we wrap up the Facebook Live and head over to our group?
I haven't finished yet, no.
Okay,
what
so
I've
we've got a
done
little
is
bit more gold.
I've got a bit more gold, and then I'm going to go to the private group. And
You're holding back, George.
Yeah. Okay, so let me tell you a little bit more gold. Yesterday I was on Channel 10. I'm doing build to buy. As everyone knows, I've been doing quite a few series. I've been in negotiations with Channel 10, and it looks like we might be getting our own show.
Ooh,
it's pretty exciting. How exciting is that? I've been wanting to get my own show for a while. Instead of being on TV for 3 minutes, I'd rather talk for half an hour.
You'd rather do 3 hours.
Yes. They said I need some media training, and they said, look, it's going to be challenging, but we're going to get you in. So I don't know what that means by media training. I didn't think I was that bad. Maybe I'm not politically correct
really
enough
well.
for Channel 10, right? They have to keep bleeping things out. I don't know. But anyway, now they convinced me to do a bit of a prediction on camera.
Okay.
So what I did is I actually released one of our top 100 suburbs to the public. And that's going to come out in a few weeks. So everyone in Australia is going to know about this area and that it's in the top 100, that it's going to go up. So I'm not going to mention it here because it's going to be on Channel 10, but our private group, I'm going to tell you which suburb it was. And I'm going to make sure our private group get the properties in this private suburb before the public do. Okay, now we can switch off the live and now we can talk to the group.
Okay.
Okay.
Let us know. It still says live.
That's okay. We can keep talking. Okay, now we can do Q&A. Hello, everyone. Great to see you.